A few minutes ago, something happened that could change gas prices, the stock market, and maybe even your retirement account. Yes, literally minutes ago. Reports are coming out that Donald Trump has ordered a blockade targeting Iran after peace talks collapsed. And the moment that news hit, the market reacted instantly. Oil exploded past $104 per barrel almost immediately. Dow futures dropped nearly 500 points. And suddenly, Wall Street is asking one terrifying question. Are we about to see another inflation shock? Because if the Strait of Hormuz gets disrupted, the entire global oil supply chain feels it. Nearly 20% of the world's oil shipments pass through that narrow stretch of water. So when tensions rise there, Americans feel it at the pump. That means higher gas prices, higher shipping costs, higher grocery prices, and yes, possibly another hit to your wallet. Think about this for a second. Just when people thought inflation was cooling down, the latest CPI report just came out showing prices jumping 0.9% in a single month. That's the biggest monthly jump in years. And the main reason? Energy, oil, gas, exactly the things affected by this geopolitical crisis. Now here's where it gets even more interesting. While the market is panicking about oil and inflation, another huge event is starting right now on Wall Street: earnings season. Some of the most powerful companies in the world are about to reveal their numbers this week. Banks like JPMorgan Chase and Goldman Sachs, tech giants, streaming giants like Netflix, and investors everywhere are asking the same question. Can strong corporate earnings save the stock market from an oil shock? Because when uncertainty hits global markets, investors usually run away from risk. Stocks fall, volatility spikes, and people start protecting their money. But here's the twist many analysts are talking about. Some strategists believe this could actually create buy-the-dip opportunities, especially in tech. Companies tied to artificial intelligence and cloud computing have been dominating the market lately. And if geopolitical tensions cool down quickly, many experts believe tech stocks could bounce back faster than expected. But that's a big if. Because right now, the biggest driver of markets isn't earnings, it's geopolitics. And when oil spikes, the entire economy feels the ripple effect. Truck drivers pay more for diesel, airlines pay more for jet fuel, shipping costs rise, and companies pass those costs directly to consumers, which means one thing: inflation doesn't disappear, it sticks around longer. And if inflation stays high, the Federal Reserve might keep interest rates higher for longer too. That impacts mortgages, car loans, credit cards, basically everything tied to borrowing money. So the big question tonight is simple. Is this just a short-term geopolitical scare or the beginning of another inflation wave? Before we go deeper into what could happen next in the markets, take 2 seconds to support the channel. If you enjoy these real-time finance updates, hit like, subscribe, and drop a comment telling me where you're watching from. It really helps the algorithm push these videos to more people who want straight market news without the nonsense. Now let's talk about what investors are watching next. First, oil prices. If crude keeps climbing above $110 or $120, that's when economists start getting nervous, because historically, oil spikes have triggered some of the biggest economic slowdowns in history. Second, the stock market's reaction. If the S&P 500 holds steady despite rising oil prices, that means investors believe this crisis could cool down quickly. But if we see heavy selling across tech, banks, and consumer stocks, then Wall Street might be preparing for a longer storm. And third, the Federal Reserve. If inflation continues climbing because of energy prices, the Fed could delay interest rate cuts even longer, and that would keep borrowing expensive for millions of Americans. So right now, the market is balancing 3 massive forces at the same time: geopolitical tension, inflation pressure, and corporate earnings. Any one of those can move the market, but together, they can create serious volatility, which is exactly what we're starting to see. The next 24 to 48 hours could be crucial for investors everywhere. Oil traders are watching every headline, stock traders are watching earnings, and everyday Americans are watching the one number that matters most: gas prices. Because when oil jumps this fast, it usually shows up at the pump sooner than people expect. And that's why this story is exploding across financial news right now. If you want daily updates on what's moving the markets, what's happening with inflation, and what it means for your money, make sure you're subscribed so you don't miss the next breakdown. And tell me in the comments, how high do you think gas prices will go this summer? Because the answer might depend on what happens next in the Strait of Hormuz.